Are you trying to increase your credit score but just can't figure out where to start? Today, I'm going to share 5 steps that you can take to increase your credit score and have overall amazing credit. Hey, hi, hello. My name is Rachel, and this is a place where we talk all things money, savings, and debt. So let's get into it. First things first, a credit score is a number that is determined by 5 different factors that essentially show lenders how good of a borrower you are. Those 5 factors are payment history at 35%, current debt ratio at 30%, account history at 15%, inquiry history at 10%, and the types of accounts you have at 10%. So here are some steps that you can take to start increasing your score today. 1, focus on debt and collections first. If you have any debt and collections, it essentially means that you've defaulted on debt in the past, which doesn't look good to lenders and also can affect your score pretty heavily. With your payment history being the heaviest factor on what determines your credit score, debt and collections essentially means that you have a pretty bad payment history with your debt. So getting that behind you and paid off first can definitely have a big effect on your score. And a tip for this is you can actually call the collection agency and try and negotiate a lower payment. And a lot of the times they'll work with you to create a payment schedule or even accept a lower payment if you can pay it that day in full. So it's definitely worthwhile calling those agencies and seeing if there's anything you can do to negotiate not having to pay the entire sum. Step 2, make your payments on time. If you have to set up auto pay so that your bills are getting paid automatically without you having to think about it, do that. Because the biggest thing that will affect your credit score going forward is making sure that all of your bills are paid on time every month. This will have such a big impact on your score because over time, it essentially means that you're getting better at paying off your debt. And so you will be rewarded with a higher credit score for that, which will show lenders that you're doing better with your debt and you're able to maintain it and pay for things on time and you're a reliable borrower. Just be sure that if you are setting up automatic payments for your bills, that everything is set up correctly so you're not overpaying or underpaying anything. And sometimes you don't want to just set it up and forget it. You want to maintain looking at it just to make sure that all of your bills are being paid, that nothing's bouncing, and that you're not getting double charged or overcharged for anything that, you might not be aware about because you're not looking at your monthly bills. So even if you do have automatic payments set up, just make sure that you're still paying attention to your budget. Step 3, only use 30% of the credit that's available to you. Essentially, that means if your entire available credit that is in your name is, let's call it $1,000, that means you are never using more than 30%, which would be $300 of that $1,000. If you have $10,000 in credit to your name, that means you're never using more than $3,000. And now I understand that a lot of people are in the situation where you are utilizing 95% of the credit that you have available to you. And so, of course, the goal is to try and pay off all of that debt so that we can get to a more reasonable credit utilization. And if you're looking to increase your credit score quicker based on your credit utilization, you can try and get credit card increases where if your limit is only $1,000, they might up it to $2,000 if you are able to take out another credit card and have another credit card limit available to you, increasing the amount of credit available to you. In turn, as long as you do not use that new credit available to you, it will help decrease your overall credit utilization. And that can be a quick thing that you can do to increase your credit score, though definitely proceed with caution on that one because you need to be very responsible with your money because you can put yourself into a worse off position if you're not careful. Step 4, age of account matters. So don't close those old accounts that you don't necessarily use anymore. Having an account open for a very long time shows lenders that you are going to be with them for a long period of time, meaning they'll be able to make money off of you for a long period of time. But our goal is to not let them make money off of us. But for example, I have a credit card that I opened back in 2018, and even though it is 6 years old and an account that I never use anymore, it is a card that I maintain. I use it maybe 1-2 times a year, immediately pay it off. But I keep the credit card to show lenders that I am able to maintain credit for long periods of time and be responsible with it over those long periods of time, even if it's a card that I'm not really using. So even if it's sitting at 0 for months on end, if there's no payment to pay, I'm not missing payments, and it just kind of helps increase my credit without having to really do anything. And it, as long as it's a card that's not costing you oodles of money, a lot of the times your older first credit card is something that doesn't have a yearly fee, or it probably has a very small yearly fee, and they're worth keeping, you know. If it's something that you absolutely have to cancel to be able to do something like consolidate your debt, those are different scenarios. But if you just have a credit card that's really old and you've been thinking about canceling it because it's just getting dusty in your wallet, just let it keep getting dusty in your wallet. And if you do happen to have to cancel a credit card and it does negatively impact your score, just know your score will rebound from that. It will go back up. It may take some time, but closing an account isn't end all be all. But it's definitely something to just consider when you're looking at your credit score and credit report. Lastly, step 5. How many inquiries you have on your account matters. So what this means is how many times you have applied for credit cards or loans where they have done a hard credit check on you, and it shows up with how many inquiries lenders have made on your credit score. Banks do these, lenders, and anytime you're trying to get an auto loan, a mortgage, open a credit card, they run a hard credit check on you, and that will show up in your credit report as an inquiry. And now, these aren't horrible. A lot of the times, they're actually incredibly necessary for you to be able to do something like get a car loan or a mortgage or open any credit card. Those are things that normal people do. What you don't want to be doing is applying for 6 or 7 credit cards at once, and anytime you try and get credit increases on those cards, there will always be a credit inquiry check, a credit check on you, and that will be added to your account. So if you're having a lot of inquiries on your account, that can show lenders that you're trying to get money from multiple places at once, or within the same year. 1 to 2 inquiries every 6 months isn't a horrible number, but they do stay on your report for a certain amount of years before they kind of start falling off. And so the lower the number that you can stay at, the better. So if you know you're going to be needing to get a big loan at some time in the future, it is best to limit those hard inquiries in the few months leading up to when you're going to need the big loan, like a mortgage or car loan. Applying for a credit card the week before you're going to buy a new car probably isn't the smartest idea, since the credit card will probably have a negative impact in your score when you're going to be applying for a loan that will have a negotiable interest rate. And if you have something that negatively impacts your score, you want to have the best score that you can. If you're still feeling like some of these things might be kind of hard to do and you're still feeling a little lost, I recommend checking out my video on how to track your finances, where I really break down how to track your budget and get your finances in order. And with that, I'll see you in the next one.